Welcome to Looking at the Markets with David Modell. This is another video in my series, Investing for Beginners. And I'm going to tell you what a penny stock is today. I know that's a hot topic. And just be aware that you can email me at any time if you have questions or you want some help with stocks, investing, putting together an investing plan, because you really need to have one if you're going to invest successfully. You can email me anytime. My email address is right down there. It's davidmodell@gmail.com. All right, so what is a penny stock? Well, first of all, the technical definition of a penny stock, according to the United States SEC, which is the Securities and Exchange Commission, which oversees stocks and stock markets and things like that. The technical definition is any stock where the shares are less than $5 in price for the stock shares. That would be a penny stock. And so they're not all trading for a penny, all right? They're not all priced at 1 cent. In fact, they're not even all under $1. If a stock trades for $4.99, technically speaking, that's a penny stock because it's under $5 per share. But some penny stocks are a penny. Some of them are less than a penny, a fraction of a penny, believe it or not. I've seen stocks that trade for 0.001 cents per share, and that's fine. I mean, it could still be a good company, possibly, and those are called sub-penny stocks, SUB, sub-penny stocks, when they trade for under a penny per share. All right, now, just because a stock trades for a very low price, that doesn't mean necessarily that it's a bad company. Doesn't mean it's a good company necessarily, just based on that, all right? Share price does not tell you everything you need to know about whether a stock is good and whether the company that the stock represents is any good. So what you want to do is you want to research every single company before you purchase it, all right? Now, penny stocks, it's kind of interesting because you'll hear about penny stocks in chat rooms, newsletters, social media, message boards, places like that, urging you to buy penny stocks. Some things you need to be aware of. Although some penny stocks do trade on a major exchange, such as the NASDAQ, also many of them trade on smaller exchanges, over-the-counter exchanges, pink sheets, that kind of thing. And those are smaller exchanges. And sometimes they may not have the oversight. They may not be monitored as closely and might not have the same safeguards for consumers, for investors that, let's say, the NASDAQ might have or some other large exchange. And so be aware of that. And so caveat emptor, right? Let the buyer beware. That really is the key phrase here. And that's true for any stock, whether it's a large stock or a smaller company, such as a penny stock. All right. Now, sometimes the thinking of people who buy penny stocks will be this. Sometimes they're thinking this. It's easier for a stock that's maybe a penny to double in price than a more expensive stock. And that's the thinking. And there might be some logic to that, possibly. I mean, it is more difficult for a stock that's $100 per share to double and get to $200 a share. That would take a lot for that to happen. Whereas for a stock to go from 1 penny to 2 pennies, that would be doubling, and that mathematically might seem easier and more likely to happen. How about tripling? For a $100 stock to get to $300, that would take a lot. All right, it would probably take a long time in most cases for that to happen. Whereas for a stock that's only a penny in price to get to 3 pennies, that would be tripling. All right, and so people sometimes will buy penny stocks thinking, oh, I'm going to get the next 2-bagger, doubling in price, or 3-bagger, tripling, 5-bagger, 10-bagger, whatever. But as with any stock, I wouldn't recommend just buying a stock just based on the fact that it's very low price. And I wouldn't buy a stock just because it's a high price or a medium price. I would research the company, make sure it's a good company, or better yet, a great company at a reasonable valuation, reasonably priced, considering how, what their profits are, what their earnings are, that kind of thing. So do your due diligence, meaning do your research, know what you own, and that's always true at any price. Don't buy anything based on just hype or because somebody told you to. Make your own decisions. Be careful with all stocks. And yeah, be cautious with what you invest in. All right, so that's an introduction to penny stocks. I hope this was helpful. If it was, please give this video a thumbs up on YouTube and leave a comment. And please subscribe to my channel, my YouTube channel, if you haven't done that already. And hit that bell so you can receive the latest updates on my financial educational videos. And again, you can contact me with questions anytime, or if you just need some help, my email address is right there down below, davidmodell@gmail.com. All right, this is Looking at the Markets. Thank you for watching and listening, and I'll talk to you again soon.